Hello guys, my name is Pradyumna Ramapanse. I'm new on YouTube. This is my first video. I'm going to explain you in this video that how you can manage your stop loss very small in order to get the big profits. So let's get into it. Recently, this is 9:58 at the moment, and in last candle, if you see that there was a big red full body candle just made, which break the first 5 minutes low. So we do have a direction at the moment that we can look for puts as an option buyer. If you're option seller, you can go for call sell. So let's see when we can have a perfect time where we can enter into the market in order to get a small stop loss with sort of a big profits. Okay, so that was good. Okay, so we do have an open high available. So we'll go with ATM. That is 36 deposit. So it's 199. This is 1 minute chart where we can get it again. This is 5 minute chart. If you look at the open heights, it's already done. You can see the small rejection. Okay, we'll go for call. Thank you. Call 53,600. I will explain you the logic behind it. It's 234 at the moment. Okay, let's say 234. We have a small stop loss. We look at the perfect entry. Call. Let me show you how. Just so we are at the perfect small stop loss, so we can take a trade. Okay. So let's say we have buy this trade at 235 at the money. Well, I'm not allowed to do that, but to just explain, we have buy here. This is our small stop loss. Okay. We will decide the target. And here, this is a partial target where you can book your first profit in here. Yes. If you look at RSI as well, which is a momentum indicator, it is also down. oversold. So yes, we can gauge this momentum. Even our stop loss is very small, that we can definitely manage our risk management, even money management. So even the stop loss is getting hit, it is not a problem. We try to find the bottom at the moment. There is a reason, I'll explain it. I hope you can understand the reason why. Because of this and this. There is a buying momentum coming on. Look at, if you see this and this level, there is a strong buying coming. So the big players, which is institution, don't want to break this level. Someone is here and here, who wants to, you know, go up to the market. So if this level breaks, then you can look for the put side more. But let's see how it goes. We bought it at 235. It's still 234. And if you calculate, we have bought it at here, right? At this stage, 10 2. So if you calculate, the stop loss is 2 is 10. Okay, 10 to at the middle, which is 34. Stop loss is here, 229. So 6 rupees stop loss, which is in Bank Nifty. So that is pretty small. So we are at 237 now. The level that I have marked, this one, it should go beyond this. Then we can see a good momentum upper side. If you see, if you forget this first candle, this is nothing. If you forget this first candle, if you see, the market tried to go down, but not convincingly, right? If it's fall, if you know, in the stock market, if the fall is happen, it is very aggressively. The big red candle happens, not this kind of small red candles and then the green. No, this is not a convincing fall, right? So if it wants to fall, it falls like big red candle happens and just fall away, right? But this is not a convincing fall. So we can find at this time a bottom where we can scalp a little bit and then get out of a market. We can get a small scalp where we can get at least 3 to 4% of uh, ROI on your capital, and we are good for the day. So let's see. It goes to 143, I guess. We bought it at 235. I'm sorry, 243. I'm sorry. Let's see. We are still in the trade. We are looking for one up move from here, and then we will get out. Now we are going to reduce our stop loss a little bit. This red candle. So our stop loss is even getting smaller right now. See what happens. So it was like 6 rupees, but right now if you calculate, it's around 4 rupees stop loss in Bank Nifty, not in Nifty 50, in Bank Nifty. If this candle closes green, then we can reduce our stop loss again. But no, that's not happening. Our stop loss is very slow. So yes, if it is even 8, give your stop loss to the market. That is fine. We will find other trade. And this strategy I was working on almost like 1.5 years. I personally called it uh, 5 rupee stop loss. That is the name of strategy that I've made by myself with my experience, uh, where I've tried my best to make my stop loss as small as possible. If it is even hit, I don't have to psychologically disturbed even it's break. So even it's break, I'm okay with that. You see, there is a buying zone here. Someone don't want to get close to. If it is break, then we have to find a different source. Okay, it's break. Yes, get out of it. No problem. Okay, as it's break, get out of it. And if you look at the prices, it was 233, and we bought it at 235. So it was just 2 rupees stop loss when we were out. So it's fine. You'll find a different trade. Okay. Should be there. Something look like it. It's already crossed. If you look at it now, it's still 237, 239, which is also fine. इधर से भाग मत से. So we can call this red candle to hit the stop loss for the buyers. That's fine. I'll let you know when we can buy it again with a small stop loss. Right now the liquidity is not there. We have to wait for the liquidity a little bit, at least more 10-15 minutes. When the liquidity is there in the market, you can see the sharp and a big move. Reverence crossing it, we will still wait, because if we take trade right here, you can see the stop loss is getting quite more. It's 244 right now. Our plan was good, but we were out quite soon, which is acceptable. That was better than giving a big stop loss. Way more better than that. Okay, we can. It's just 1 hour, right? We still have 5 hours in the market, so we can definitely will find a different trade where we can have a small stop loss again with a huge target. So we will find that again. And if you are a scalper, at this time 247 it was good. So your target was there. Now I'm waiting to create a liquidity zone. I'm looking to get this red candle somewhere here. Then we can initiate the trade once again. Because one big up move is coming. Okay, we can be a stop loss at, okay, we buy it right now. I'm trying to explain you where you can have your small stop loss, as small as possible. Okay, we 234. We buy at 234. Remember, we buy we bought it at 234, and the stop loss is, once again we just remove this. Right. This is the stop loss now. Small stop loss. We can get the target little bit bigger. So I'll tell you where is the first target, where the second, the partial targets. First, second, third, and this is the last one. 234, we are at 238 right now. We bought it at 234. Come on. Okay, and just to remind you that we gave the stop loss for 3 rupees first. Okay, the first trade where we gave 3 rupees stop loss to the market, which was fine. No problem. Now, the reason of we are taking the trade here, see, this is a liquidity zone, right? And see, the move which is going down is not convincing. This is not a institutional selling, right? If institution is interested to sell the market, this is not the way how they are doing this. No, this is just to create a selling pressure where the retailer can trap to buy more at the downside. So that's the point. And if you see, we do have a level here where we can mark as a upper side. Okay. This is the stop loss. Just see what it at one. Sorry, one again and again. 234. The buying price is 234. This is another example. If you're looking for a good move that come up to this level, this should break this one. Then we can see a good move on upper side. follow you to something like this. If you look at the trend line, it's not break yet, and we bought it before it's breaking. So at that time, we will have very small stop loss, which we are ready to give to the market. If you understand what I'm saying, we still do not mark the levels for Nifty 50. Sorry, trading in Bank Nifty right now, so we have levels here. This is also important. But this is really important zone where we can buy. Look at this. Look at the buying. One, two, three, six. Break down, four. This is really important. If this breaks, then we can see a sharp down move at the downside. Let's. This is important. This should break in order to get our target. This is the stop loss. This is the entry. This is the zone. If this breaks, then we can have a sharp move on upside. This is called liquidity zone, consolidation zone, in other words, which is really important. At this time, the institution is out of the market. They are trying to give some time to the retailers to build new positions where the institution can trap them. So when institution tries to trade, before they execute their trade, they made a situation in a liquidity zone which is a fake one right now. Let's say if institution wants to go down, okay, they are interested in put. So they try to raise the prices to this kind of level here, and they start selling the market. So they can have more stop losses. They can trap more call buyers and put sellers. So that's how they can get their target very easily with the big candles. So we try to study the institution, and what I think is they are trying to trap right now the retailers to buy more put. And if you see, this is a 1 minute candle, this green candle, this is the institution candle. Now if you ask me why, do you see the volume for just this 1 minute candle? Why the volume is up? Now you see that is a red candle, then why you are going for put, right? I will explain you that as well, not in this video, another video which you will make. It is breaking, We are at 244 at the moment. Come on. This is our first target. Okay, good. Look at the momentum. Look at that. Look at that. 240, 250. Come on. The first target is hit. The first target was hit. So the partial profit is booked, where our stop loss is at 0 right now, where we exactly buy the call. That is the exit point now. Even go if this candle goes here, we will get out of the trade and we will have our partial profit booked. That is not convincing candle. This is not a good candle if you are in a call buy right now. This red candle was not good. It doesn't have volume but is not good. But let's see, we are still in the trade. If this breaks, then we will out. If it is not, then we'll be in the trade.